Right. Activity-based costing, right? First of all, if you just listen to the name, it will tell you that it is also another approach to help us determine what the cost of our company's product or service will be. That is all. There was basically a problem that the traditional costing systems had, right? And as a reason, we are saying the activity-based costing approach is the much more better way, or a much more detailed approach of ascertaining the cost of what a company's product or service. So ABC basically is a different approach to costing. Okay, so aside the absorption costing and marginal costing, we have what the activity-based costing approach. Now, this particular area was tested last night, okay, and it's a part of the models of evaluation. So, this, okay, all right. Now, why is it important that we get to understand the use of this ABC system as compared to the traditional approaches towards finding or ascertaining the cost of a company's product? The reason being, or the reason is that the ABC approach tries to look at a company's activities, right, or a company's operations. It breaks it down into what different activities. And some of these activities, the traditional costing system will not view a company's operations in that light or in that way. So under ABC, you see that determining the cost of any company's product or service will be much more detailed, because you are trying to look at what basically generates, or what activities within the company's operations generates cost. Okay, so the littlest thing that generates cost, we are saying it is a key activity, and so we need to know what cost that operation is generating and try to charge a part of it into the products that we are producing. I hope that is clear. So ABC, we are saying, is an alternative approach to product costing. One thing that I interest you to know is that it is a form of absorption costing. So what that means is that under ABC, we are also trying to determine the full cost of a company's product or service. Okay, so under ABC, we are looking at the direct costs, direct material, direct labor, direct expense, and then we're also looking at what? Including both the variable and fixed costs as part of the cost of what? The company's product. However, the way we do it, we are saying, is what? A bit different from the traditional absorption costing system. All right. So for ABC, we are saying, rather than absorbing overheads based on, you remember the absorption basis we spoke about, right, in our earlier meeting: production volume, labor hours, machine hours, percentage of direct material cost, percentage of direct labor cost, which is what the traditional absorption costing will do. ABC rather tries to first of all allocate your overheads into what we call cost pools. So this is a new terminology. We have what we call a cost pool under ABC. Under the traditional costing system, we call that a cost center. Okay? All right. Then once it does this allocation of overheads into the cost pools, it then absorbs, or it then charges it into the product we are producing using what we call what? Cost drivers. Okay? So this is also another fancy name for your overhead absorption rate. So what you call OAR under traditional costing system, right? We call it a cost driver rate under ABC. I hope that is clear. All right. So A cost pool, by its definition, is an activity for which overhead costs can be identified and was allocated. So we group all costs, that similar costs, into what? A cost pool. Same idea for a cost center. Then once we have been able to do that, we use what? A cost driver, which helps us to understand how cost is what? Driven within that particular cost pool to allocate or charge the cost there to our product. All right. So that is the basic or the foundational issue under ABC. Now, how does ABC compare to absorption costing? So let me read this out so that you see the fundamental problem as to why ABC is a superior costing approach to the traditional absorption costing system. So imagine your company is a manufacturing company, right? And in there you have a machining department. And they make clothes in there. If the company was operating the traditional costing system, then we are saying the overhead absorption rate that will be used to charge. So today, the question I asked you, I'll give you the answer later. So you can even find your answer here and you know whether you got it right or wrong. We use the overhead absorption rate typically because the company will be machine intensive. We are going to use what? Machine hours to do the absorption of the overhead to the company's products. Okay? All right. So overheads like power, right? Power, maintenance, machine depreciation, etc. All of these costs, right, will be charged to the product based on what? The OER, which finds its basis as what? As the machine hours. But we are saying if we use the machine hours as the basis to allocate the costs that we have collected, right, into our product, it may not be a fair basis. It may not really be a fair basis because there are other overheads or there are other costs that do not make use of the company's machines. Okay, so it's like you are charging all the overheads of the company using machine hours, but there are some overheads that do not make use of the machine hours. But all of those costs are being charged to the product based on what? That machine hours. So it means that you will be allocating the wrong amount of cost to your product. That is the problem. Okay, that is the problem. And so, to some extent, it makes the cost we are going to, or the amount of cost we are going to include in our product to finally get its cost and then find the price of our product to be a bit inappropriate or inaccurate. Okay, and so ABC comes in and says that when it comes to allocating our overheads, we are not going to use departments as the gathering point, but rather activities. Okay, rather we use activities. What does the company do when it comes to this production? Before we produce, what do? We will procure, right? There are some costs we are going to incur in there. Then we will have to set up our production, we have to set it up, right? So set up costs, right? And so on and so forth. So those activities are what they are going to use as what? As the cost pools and not departments. The ones they do this allocation, they are going to determine what the cost drivers are. Okay, all right. So under ABC, we are saying your standard cost card will become more detailed and more relevant to a company who uses what? Modern manufacturing techniques. Because rather than absorbing your overheads on a production volume basis or a machine hour basis or a labor hour basis alone or all the other ones we learned, we are saying ABC firstly allocates overhead to the cost pools before absorbing them into units using the cost driver, which is a much more better approach. ABC establishes separate cost pools for support activities such as, so these are the activities we are talking about. Material handling. When you procure materials, right? What we call inbound inbound logistics, right? Taking them from your supplier's warehouse, bringing them to your warehouse, like the transportation, all of those things, right? So handling them and putting them there. Material procurement, what goes into procuring materials from our suppliers? Setup, right? Setting up the machine for our production scheduling, right? And again, you know that for many manufacturing companies, they like to produce in batches. So there'll be schedules, right? When you are done producing, quality assurance, you have to inspect. So inspection activities. All of these small things generate costs. So you can see how ABC breaks it down. Okay, and that is why we say it's a much more better approach towards determining the cost of a company's product. So we are saying the use of the cost driver or the use of the cost drivers is the main idea behind ABC, as they highlight what causes cost towards increase. And so, for example, if the number of orders that we place to our suppliers to procure goods increases, then definitely we expect the cost of procurement, right, or the cost allocated to procurement to also increase. So if the number of procurement is high, the cost will be high. If it is low, definitely it will be low. Okay, and so on and so forth. So these are the issues. All right. Any question, please? Any question on what we have done so far? Anything you do not understand? Let me take it again. Anything you do not understand? Or someone is saying, said, this thing to not even come. Last day they asked this, so let's move on. What do you say? Someone saying something. Okay. All right. So the problems that we hey, someone has their mic on. Right. Okay. So the problems that we set the traditional costing system or the traditional costing methods have, right, is that too little details may be placed on the most significant costs. That is because the basis on which we are charging the cost to our product, okay, may not take a closer look towards the costs that are much more important. Controlling costs may be a bit difficult, right, when we use the traditional costing approach. In allocating costs, we are saying it may be unrepresentative, okay, because for many companies, nowadays, because of the way they've modernized their operations, they make less use of labor or manpower or labor hours, right? And so if for that company, they have a policy of using the labor hours as the basis of apportioning or charging their overheads into their product, then definitely there will be a problem, because now more than ever, the labor hours will be what? Will form part of a smaller proportion of their production cost. Okay, and again, that will not be a fair basis for charging the overheads. So that is also a problem. And if, again, you get your costing wrong, it means your pricing will also be wrong. Okay, so it is either based on the traditional costing approach you are using, you end up having a very high cost for your product. And that will mean that a much more higher price for your product. And since you are not operating in a vacuum, but you are competing with your competitors or other companies, charging a high price just because you had your costing wrong may mean that customers may switch your competitors who will be offering a much more lower price. Alternatively, if you get the cost wrong by allocating or charging a much more lower cost or a much more lower proportion of your overheads into your product, that will lead to a final product that has a much more lower cost and therefore a lower price. And if you are charging a lower price, clearly that may mean that profitability will suffer. So again, it will lead to, it could lead to poor pricing either on the high side or the low side. Okay. And so these are some of the problems or challenges that the traditional costing system brings about. And so we are saying in applying the ABC approach, how do we go about it? And this was the 3-mark question that the examiner asked you in your paper last night. Okay, if I'm to pull that question out, right? So this is the ABC. I hope you can see my screen. It's an ABC question, right? And it says here that for 3 marks, identify the steps involved in absorbing overheads to the cost of a product using the ABC system. Okay, and we have some basic 5 steps. And I'll walk you through them, but with examples, we'll be able to see how it all plays out. All right. So first of all, we are saying you will need to group your overheads, and we said we are going to do that not based on department, but based on what? The activities. So they will spell out what the activities of the company's operations are. And so we are going to group our overheads based on what? Based on the activities. So first of all, we need to determine the cost pools. The examiner will make it very simple for you, tell you what they are. And once you determine the various cost pools, the step 2 will be to what? Determine the appropriate cost driver. Appropriate because if you match the wrong cost driver to the wrong cost pool, whatever you are going to do will be wrong. Okay? Because the basis on which you are going to charge the cost to your product will either be low or will either be high. So there will be inaccuracy. So determining the right cost driver, the right cost pool, is also something you need to know. Then step 3, we will calculate what we call the cost driver rate, which, like we have here, is similar in some way to the OAR under what? The absorption costing approach. And once you determine this OAR, it is the OAR that you are going to use, or sorry, the cost driver rate and the ABC that you are going to use to what? Charge your overheads into what? Your product. So please, I've answered the trivia question I asked you. So all those who were choosing A, you are wrong. Okay, and I'll give you a full breakdown of why that is so. So the answer is C. The OER under the traditional costing system, or the CDR, cost driver rate, under the ABC, is used to absorb the costs or the overheads into a company's product. Then once you have been able to do that, you can then be able to ascertain what? The full production costs and or the profit of the company at the end of the day. Because we said once you find the cost of a product, you can be able to determine whether it's a profitable product or a loss-making product. That is all. Okay. So for 3 marks. All right. So let's get into some questions to see how we apply these 5 steps. Any question, please? Any question? Hey, the way you don't have any question, no, I don't know whether to be happy or to be sad. Because if you're not minding me, it means that you over understand or you don't understand at all. And so you want me to take 1 or 2 things. Give me emoji, let me see.
Oh, it's okay.
It's okay, eh? Or you want to rewatch the video later and then you ask it. Okay.
Sorry, yeah, okay.
Yeah, okay. All right. Madam Cynthia, is that you?
Yes. So.
Okay. All right. You are fully active. I like that. Okay. So ABC. Obibeka, it will not come next that. Don't worry. Let's learn it. Okay. You need it for something else. So here it is ABC versus the traditional costing system. And if you've noticed, check last night, the way the question on ABC is asked, right? The last time ABC was asked was in July 2025. Check it. You basically see that it is almost always the examiner asking you to prepare or estimate what the costs of your company's product will be under both the ABC and then the traditional costing system. Okay, so what we are doing is comparing ABC. So it's ABC versus the traditional the traditional costing system. All right. So I'll start with a very simple question. Then we'll proceed to look at what more complex ones. Okay, I beg you, someone should read for me so that I also catch my breath.
Okay, I'm reading.
Okay.
Jack PLC manufactures 3 products, A, B, and C. Data for the period just ended is as follows. So we have for A, B, and C, production units 20,000 for A, B 25,000, C 2,000. Sales price per unit $20 for A, $20 for B, and $20 for C. Material cost per unit $5 for A, $10 for B, and $10 for C. Labor hours per unit 2 hours for A, 1 hour for B, and 1 hour for C. Labor is paid at a rate of $5 per hour. Overheads for the period were as follows. So we have setup cost 90,000, receiving 30,000, dispatch 15,000, and machining 55,000, all making a sum of 190,000. Okay, the cost driver rates we have for A, B, and C. So machine hours per unit.
Hey, please read it again. No, please read it well.
Cost driver data. Sorry.
Okay.
Okay, so machine hours per unit. A is 2, B is 2, and C is 2. Okay. Number of setups. A is 10, B is 13, and C is 2. Number of deliveries received. A is 10, B is 10, C is 2. Number of orders dispatched. A is 20, B is 20, and C is 20. Required. Calculate the cost and hence profits per unit, absorbing all the overheads on the basis of labor hours. B. Calculate the cost and hence profits per unit, absorbing the overheads using an activity-based costing. Thank you.
Approach. All right. Thank you very much. So you can clearly see, do the same thing, but under 2 approaches. Okay. And especially when it comes to the approach where you use the traditional one, the examiner likes to tell you the basis of absorption. In the question we are solving here right now, in determining or estimating the cost of the company's products, it says use the what? Labor hour basis. And by this time, you know the basis of absorption. We've done them, right? In another question, you see that they will tell you that estimate the cost of the company's product, assuming the absorption basis they use is the machine hours. In another question, you see production units. Last night, he told you to use what? The percentage of what? The direct material cost and then the percentage of the direct labor cost. So always they will tell you the basis of what? Absorption to use under the traditional one. And then the other one will be what? The ABC. So let's take them one by one. Okay. So at the end of the day, we are just preparing a cost card for all the company's products. Right. So let me have that here. So we are trying to find the cost per unit, right, of the company's products. And here we'll be using the traditional absorption approach. Or let me say the traditional approach. Let me just say traditional approach. Okay. When we are done, please just take past questions and then just try to see whether you can be able to make something out of it. Right. So we have 3 products, A, B, and C. Okay, so what goes into the cost of any company's product? Yes. Help me.
Material.
All right, material. So direct material. Okay, so let's come to direct material. What do we see? what is the type of information presented here? It says material cost into bracket per unit. So the question has made it very simple for us. It is the cost per unit of our product that we are looking for. So for the material, we've been given what? $5. So again, let me put it here. Cost per unit. Cost per unit. Okay? Cost per unit. So the 5 is already the cost per unit for A. The 10 is the cost per unit for B. And then the other 10 is what? The cost per unit for C. You are done. When you're final calculation, yeah, straight away. Okay, next one. Direct labor, right? Now, what do you see is the information provided here when it comes to labor? What do you see here? What do you see? This is the labor hours per unit. Simply translated, this is the number of hours required to produce one product A, the hours required to produce one product B, and the hours required to produce one product C. But what we are looking for here is the cost per unit. So how do we get it? Then the question further tells us that, oh, the workers are paid what? $5 per hour. So we know that by multiplying the hours for the respective product by the rate which is paid for the workers across all the three products, we can then determine what? The product cost or the labor cost per what? Per unit. In another question, the examiner will give you the labor cost per unit straight away, just like they did for the material cost. Okay? So question B and N. I just want you guys to be mindful of it. All right. So for the direct labor cost for product A, that would be 2 hours times what? The $5. And that will give us what? $10 per unit. All right. Then for product B, it is 1 hour by $5 per unit. And that will give us what? A total of $5 per hour, sorry. And that will give us $5 per unit. Then for product C, we have another 1 hour needed to make the product, multiplied by what? $5 per hour, and that'll give us $5 per unit. I hope that is clear. All right. So we have direct material, direct labor. There are no direct expenses. What is left? Our overheads. I hope you remember something like this. In our last meeting, we did something like this, right? So this is it. So we need to absorb the overheads that we have here into our product. And we've been given the total overheads for the period. So these are the various cost centers. Thankfully for us, we just need to calculate what we call the blanket OER. Okay? We don't have to calculate an OER for setup, an OER for receiving, dispatch. Nah. We just need to calculate one. So in absorbing our overheads, we compute the OER, which is the overhead absorption rate. And what is the formula? Someone should help me. What will be the formula? Please, this is just Saturday.
Budgeted production overhead.
Okay, the
Divided by
budgeted.
the. It's raining here, so my voice is a bit shaky.
All right, I can hear you clearly. Don't worry.
Okay. Divided by the budgeted total of the absorption of the basis of absorption or some, yeah.
So in this particular question, what is that absorption basis?
Labor hours.
Labor hours. So that is what I want to hear from you. Okay. All right. So in this particular question, the absorption basis is what? The budgeted total. Okay. So let me put here total. So this is total. Total budgeted labor hours. Right? Okay. So the total budgeted overheads, when we sum everything up, is 190,000. divided by the total budgeted labor hours. Now, have we been given the total labor hours? No, but we can be able to what? Determine it. So simply, or someone will help us. I want someone to help us. We've done this. We did this in our last meeting. I just want to see whether you remember. So someone to help us. How can we be able to determine the total labor hours? Just give me the formula for it, or how you go about it. Just give it to me so that we proceed. Anyone. I don't want to call names. When I see your name, I'll call you. Abdul Rahman, you are the first person. Oh, Abdul, I'm not sure, Abdul, did you join at the last meeting, or you can be able to help us?
Yeah, the total labor hours is you take the production, that's the production units multiplied by the labor hours per unit.
Okay, for each product. All right, that's fine. So for
each product, so for A, we'll have 20,000 multiplied by 2 hours. B, 25,000 multiplied by 1 hour, and C, 2,000 multiplied by 1 hour.
All right, thank you. Okay. By 1. So 40,000 hours for A, 25,000 hours for B, 2,000 hours for C. You sum everything up, you get what? I believe 67,000 hours. So you divide this by the 67,000 hours, and that gives us an OER of
2.836. So 2.84, yeah.
okay, 2.84 per hour. So this is a rate. And since the rate is per hour, it means we will need to use the hours that they work, right, to charge or absorb this rate into what? Into the product. So what that will mean is that for product A, the labor hours used is what? 2 hours. And then we are going to multiply it by this rate, which is what? 2.84. Okay. And what would that give us? Product B, it will be 1 hour by 2.84. And then product C, it will be another 1 hour by 2.84. So this will give us 2.84, 2.84, and this will be what?
5.68.
5.68. Okay, so that is basically it. We add everything up and then we get what? The cost of each product. That's all. So what would that be? So I think this will be 17.84. This will also be 17.84. This would be 20.68. All right. So we have the cost per unit. It says we should find the profits per unit also. That was the requirement of the question. So to find the profit per unit, we'll just take out our selling price, okay, from our cost, and that will give us what? The profit. All right, so let's do that quickly. So profits per unit is the selling price. So let me put the selling price here. It was 20 for all of them. So 20, 20, 20. When you deduct it, this will give us a loss of 0.68 per product. So profit or loss. Right, per unit. This will give us a profit of how much?
2.16.
2.16, okay. And this will also give us 2.16. All right. So using the traditional costing approach, we see that product A is a loss-making product, and we can take a decision. And some of the decisions we can take is whether to shut down the production of A or to probably continue the production. And that will be based on some relevant words, costing analysis, right? B is a profit-making product. C is also a profit-making product. Okay, so shutdown decisions we can take from an analysis like this. All right. So traditional costing is something we are familiar with. Let's go to ABC, which is a new thing here. So ABC will follow the 5 steps. I like to do that so that you appreciate it. So the cost per unit using the ABC approach. Right. So we are doing the same thing. We have 3 products, A, B, and C. What goes into the cost of the product? Direct materials. How much? 5, 10, 10, right? Five, 10, 10. Direct labor, same thing. We have already done it, so I can just pick the figures. 10, 5, 5. Okay? So 10, 5, 5. Our only issue is what? With respect to the overhead. So how are we going to what? Absorb it? I know you have a number of ways to go about it, but please allow me to use the 5 steps. The 5 steps are very crucial because sometimes the examiner will not ask you to estimate what the cost of a company's product will be using ABC. The question can just be calculate the company's cost driver rate. Okay? And so on and so forth. So let's just go through the steps. Very crucial. So step 1 under ABC will be to identify the cost pools. So go through the question and ask yourself, what are the cost pools given to you? If you can't determine it, it means the question you can't solve it. So under ABC, the cost pools will basically be the various activities or the gathering points where we can what? Allocate all the overheads. So that is setup costs. We have a total of 90,000 overheads allocated there, receiving, dispatch, and machining. Okay, so let's put it like that. Setup, receiving, dispatch, and then machining. Right. Step 2 says what? Identify the corresponding cost drivers, match it. Where is Unya Neronga? Now what for you? So we have what? Cost driver data. Cost driver data. For any ABC question, the examiner will give you cost driver data. I just want us to analyze the cost driver data for a bit. Now, we have machine hours per unit. We have number of setups, number of deliveries, number of orders dispatched. So we can be able to what? Match it to it, right? So for setup, we can say, oh, the number of setups, right? So we can just say number of setups. For receiving, we can say, oh, number of deliveries received. In July 2025, the examiner even did the matching for you. So you didn't have to stress. For dispatch, we can say what? The number of orders dispatched, right? And then for the machining, the information we have here, we have what? The machine hours per unit. Okay. All right. I will talk about the cost drivers for a bit, and I want you to pay key attention to this. Let me write it in red, please. The cost driver data, right, should relate to the entire production and not just one unit. Okay, what do I mean by this? When you look at the cost driver data presented to you here, what does this one mean? This one says what? Machine hours per unit. Meaning that this cost driver data presented to you, which we have matched to the machining cost pool, the 2, 2, and 2 relates to the time one product of A, B, and C will spend on the machine. This means that the cost driver data presented to you originally relates to just one product, right? And so rather than having machine hours per unit, which relates to one product, we need rather the total machine hours, because the total machine hours tells us what the total hours will be for producing what? All 20,000 of A, all 25,000 of B, and all 2,000 of C. One huge mistake people do. Last night, the person who sent me the question, I saw that they did that fundamental mistake. Right? Even though I spent time like this to talk, they did that same mistake. So please, I'm begging you. This is one thing. So for the machine hours per unit, it is important that we change it from the machine hours per unit here to the total machine hours. That's the first thing you need to do. When you come to the number of setups, you ask yourself, does this information here relate to our entire production or just a part of it or just one of it? Okay? All right. So the understanding here when it comes to the setups will mean that each time if we want to produce all 20,000 units of A, then the number of times we prepare the machine or the setup, right, to produce all 20,000 of A is 10 times. So it means that this 10 relates to what? The production of all 20,000 products. That is what I mean. Okay? We have to set up the machine 13 times to cover all 25,000 of B. And we also have to cover what? We have to set up twice. And it makes sense even if you look at how much we are producing. The one that we produce more, no, you can see that there's what? More setups to be done. Okay, to cover it. That is basically it. When we come to the deliveries received, right, and this will relate to materials that we have bought. So the number of deliveries of the raw materials we will need to receive to be able to produce all of this respectively is what you have here. So 10 deliveries to be received for A, 10 deliveries to be received for B, and only 2 deliveries to be received for C. Basically because we are producing less of C. Right? So 2 deliveries of materials will be enough. And same will be applied for what? Orders that we have dispatched to our customers. So we have to make 20 dispatches to be able to what? Sell off all the 20 of A, and so on and so forth. Please, this thing is very fundamental. When you get the cost driver data wrong again, everything else you're going to do be wrong. So it basically means that from this question, the cost driver data for the first 3 are okay, but the one that will need us to do some adjustment to it will be what? The machine hours, because it is presented in per unit terms, but we need the total. Okay, so rather we will need the total machine hours. Okay, the total machine hours. All right. So for the setups, let me write the info here. So ABC, right? Setups is 10, 13, and 2. 10, 13, and 2, giving us a total of, I believe, 25. So 25 setups for everybody. Deliveries 10, 10, 2. That gives us 22 for everybody. Dispatch 20, 20, 20. That is what, 60. However, we will need to change the hours per unit into what? The total hours. So very simply put, if we are producing 20,000 of A and we need 2 hours to produce just one of A, then we need a total of what? 40,000. I hope that is clear. So that is 2 hours. Please, this is machine hours, right? By the 20,000 units for A, and that'll give us 40,000 hours. For B, same thing, 25,000 by 2, so that'll give us 50,000, right? 2 by 25,000, and that'll give us 50,000 hours. This is 2,000 by 2, and that'll give us what? 4,000 hours. So we add up everything, and that'll give us 94,000 hours. Okay, so this is what you need to do. All right. Then step 3. What does step 3 says? About saying. Okay, 8:30. All right. What does step 3 say?
Calculate the cost driver rate.
All right. So the next one is what we call the cost driver rate. Okay. All right. And how do we get a cost driver rate? It's just to take the overhead allocated to the specific cost pool and divide it by the total cost driver data for a particular what? Cost pool. So what do I mean? So the first cost pool we have is setup cost, right? Setup cost. The total overhead allocated, so let me just put it here. They've even given us the allocation already. So 90,000. $30, $15, $55. Right. Okay. So you just pick the total overhead here. So for setup, that is 90,000. Then you divide it by the total. So ABC, what does the total give you? 20. So that is 25 setups. Okay, in total for all your products. So when you divide, what do you get?
3,600.
So $8,600 per setup.
Said
I like- I want-
3,600.
Oh, three rather. Oh, my this thing. All right, 3,000. Next cost pool, receiving. We take the overhead, 30,000, divided by the total of the cost driver information, which is 22. Right, 22. So that is 22 deliveries in total. And so that gives us what?
1363.64.
1363.64 per delivery. Okay. Then we come to which one? Dispatch. All right. So the total cost there is 15,000. over right. All right, please, can you hear me? Can you see my screen also? If I lost you guys for this. Okay, so 250, right? $250 per dispatch. Then we come to machining, and that will be 55,000 divided by what? The total machine hours. And that gives us what?
0.585.
0.585 per hour. Okay. All right. So this is the cost driver rate. There's a time that the examiner will just ask you, calculate the activity rate or just calculate the cost driver rate. And that's the question. That's all. Okay. That's all. So I want to use picture in picture. All right. I have picture in picture here. Okay. So once you've gotten the rate, just like your OER, then you are going to use the rate to now absorb the costs or absorb the overhead into what? The various products. So that is where the step 4 is. Again, I know there's another way of doing it. Okay, what you refer to as a shortcut. But because of how I want to teach it, I will take my time to go through the use of the steps. Then I can teach you the shortcuts or how to arrive at the same allocation. So step 4 will be to what? Allocate or absorb overheads to what? To the product. Okay, so you can see how a bit detailed the ABC approaches. So we have product A, product B, and product C. What we will do first is that we will allocate the overhead cost in full. Then once we get it in full, we will now look for the per unit cost, which we will require to feed into what? The overhead side over here. So that's the approach we are going to take. All right. So we'll start with the first cost pool, which is the setup. The cost driver rate that we calculated, which is the basis on which we are going to absorb the overhead, is 3,600 per what? Per setup. Now we are saying out of this rate or out of this cost, how much did A contribute? How much did A contribute? A contributed what? 10 setups. So because of the setups that we had to do to produce product A, it also helped us, or it made us generate, it didn't help us, it made us generate some costs, right? So A will get its share of that cost based on the number of setups there. So it means that for A, it will be 10 by the 3,600. And that will be what? 36,000. Okay? So that's the amount of cost that will be allocated to A. Same for B, it will be 13 by 3,600. And what will the cost be, please? I'll beg you to help me with the figure so that we can proceed
46,800.
quickly. All right, so 46,800. C will be 2 by 3,600. This one be like I think something in 2.
7,000.
Is it 7,200? 7,200. All right, okay. Right. Now, please, if you add up all of these, the cost 36,000 plus 46,800 plus 7,200. What does it give you?
So
this plus
90,000.
this. All right, you get
90,000.
90,000. And where's this 90,000 coming from? It is just this total overhead cost. So what we have just done is that we have shared this total 90,000 for the three products using the cost driver rate as what the way we do the absorption. That's all. Okay. There's another way you can go about getting this 36,000, 46,800, and 7,200 without having to calculate the cost driver rate. And it's simple. We are sharing the 90,000 for the three products. Now, the total setup for the entire organization is 25. A contributed 10 out of the 25. So 10 over 25 by the 90,000 will give us the cost that will be allocated to A. B contributed 13 out of the 25. So for B, it will be 13 over 25 by the 90,000. When you do it the way I'm doing it right now, you are going to arrive at these same figures. Okay? That is it. But we want to use the cost driver rate to do the allocation. That is why I'm going about it this way. All right. Next one is receiving. Right? Cost driver rate we got was 1363.64. Okay, I believe per delivery. So it means that for A, how much did A contribute in the whole thing? Let me bring
10.
this one down.
10.
What is it doing here? Okay, A contributed 10. So that means 10 by what we have here, right? 1363.4. And that will give us 1363, let me say 6, right? Let's use whole numbers, I beg you, so that we can move a bit fast. Okay, right. Same will be for B. B also contributed, or we had 10 deliveries. Okay, so 10 by 1363.64, and that'll give us 13636. And then C finally, I think that is 2, right? So that is 2 by 1363.64. And how much would that give us?
2727.
So that is 2727. And then this number. So 2727. Okay, right. Then we come to dispatch. And another thing, you will see in your books, right? And I would want you to ignore that approach if ABC is to come again. So what some books will do is that since we are looking for the unit cost, when they get the overhead total allocated to the product, then they'll divide by the production unit. So for A, we are producing 20,000. So they'll say, okay, for setup, the setup cost per unit will be 36,000 divided by 20,000, right? And they'll get some cost per unit. Then they'll come to B, 46,800 divided by 25,000. Then we'll get, my brother, my sister, when you do it that way, you are going to waste time in the exam room. At the end of the day, we know that for all the costs that we are going to allocate to A, they will all be divided by what? The 20,000 to get the cost per unit. So why not find all the costs to be allocated to A, all to be allocated to B, and all for C, and then you divide by their respective cost production units. Then you just get the final cost per unit, and you are done. It will save you time. You arrive at the same answer. Okay? All right. So it is also another thing that you need to keep at the back of your mind. So $250 per dispatch. That is the cost driver rate. And so we are saying A 20, B 20, C 20. So I think 20 by 250 is how much? And that will apply for all of them.
5,000.
So that'll be 5,000. So 5,000, 5,000, and 5,000. Okay, 5,000, 5,000, 5,000. All right. So because of how we are going about it, yes, I know for machining, we have the per unit hours over here, which you can multiply straight away towards to this rate per hour to get the cost per unit. But since we are treating all of them in total first, what our advice is that you multiply what the total machine hours that we got, okay, for each of the products by the cost per hour. Okay, so that's what I want you to do. So 0.585 per hour. And so for A, the total hours is 40,000. So that will be 40,000 hours by 0.585. And that'll give us how much?
23,400.
Okay, for B, 50,000 hours, right? So 50,000 hours by 0.585. That gives us how much?
29,250.
Okay, and finally, for C, the 4,000 hours, right? By 0.585. And that gives us how much?
2,340.
2,340. All right. So once you have allocated all the costs in total to the three products using the cost driver rate, you add them up. Add everything up. Okay. Add everything up. And what will we get?
Okay, so A, I have 78,036.
Please don't worry. Because of the rounding, we may get varying answers. Do not worry at all. Okay. All right. B, what do we have?
B, I have
So,
94,686.
94,000.
686.
686. All right. And then C.
17,267.
17,260. 267. All right.
Yeah.
All right. So these are the total costs. And then we can just divide everything we have here, okay, just once by what? By the production unit. So the production unit for A is what? 20,000. B is 25,000. And C is what? 2,000. Okay. So that means that the cost per unit, that's the overhead cost per unit, will be what? So please divide this over this for me.
Okay, so A, I have 3.90.
Okay.
For B, I have 3.787, so 3.79.
Okay.
And then C, I have 8.63.
8.63. All right. So we just need this. Okay, we'll just need this, and then it is going to be what? Here. Okay. I just want to copy and paste this thing, and it is giving me issues. Okay, so 3.9. Three point 79 and then
8.63.
8.63. Okay, so that is all. The ABC, just this thing we are looking for. Look how we are suffering. Traditional costing makes it very simple. Just use one absorption basis, you are done. All right, so what will be the cost per unit for this company? So 15 plus 3, so that will be 18.9. 15 plus 3, that will be 18.79. 15 plus this, so you take out 5. 20,
23.
expected 3, so 23.63. Okay, so this will be what? The costs of the product. It also says you calculate the profit per unit, so we just deduct the selling price. Okay, so it means that the profit or loss, if deducted, so we are going to deduct the selling price of 20, so we deduct 20 from this, deduct 20 from this, deduct 20 from this. All right, so selling price is 20, the cost is 18.9. So we are going to get a profit of, I believe, 1.1. Okay, to a profit. Here, the selling price is also greater than the cost. So we get a profit of how much?
1.21.
1.21. So profit per unit. However, for this, you can see that the cost is more than the profit. Okay, so we have a loss of 3.63.
3.63.
So using the ABC, we have been able to, in much detail, allocate the cost towards each product. And we can see that whereas the traditional costing system said product A was the rather the loss-making product, it turns out that product B is the what? Loss-making product. Because you see, we are producing less of this product, right? And so the return that this product is giving to the company in terms of revenue compared to the cost we are generating in producing it is not commensurate. So ABC helps us to understand that product C is generating so much cost, but it's not what bringing in the needed revenue when we sell it. And that is the reason why we are having what this problem here. So getting the right amount of cost allocated to the product, okay, in a detailed approach helps you to understand the product cost and how much profit at the end of the day is going to give you. Okay, so that is why you see that the tables have turned now. Please, I hope this is quite clear. Okay, I hope this is quite clear. All right, there's a question, another question we are going to look at, and then we can proceed to look at other issues. Let me take it.